interestingly, because I also founded IK Connect, which is a investment network for family offices in the country. So we get some interesting insights in terms of what people like to invest in. Interestingly, real estate is a legacy investment. So it's something that people have owned in the past as part of their factory growth. So people, as they grew their industries, they've acquired different land parcels, they've acquired flats and apartments and office buildings, etc. So typically you see that typically the promoter has bought an asset in his name and he has leased it to the company. So he's building his own net worth, and the company is happy because the company didn't have to give capex, right? Didn't have to put out, remove money from operations to buy a building or an office space. So this works very well. And typically you see that when the family office is set up, there are some of these legacy real estate assets. Now, a lot of families actually prefer to not go into real estate today because they feel the cycle. So real estate also goes through multiple 7-year cycles. Now the cycles are also getting tighter. But it's a difficult asset class. It's not for everybody, right? If you do it at scale, it makes sense. If you do it on a smaller level where you own one floor in a corporate park in Mulund, and then that becomes empty, and then you're trying to hustle to find a rental, it gets difficult. So a lot of people have taken that real estate money and put it into the REITs, because REITs have emerged in the last 2 years, 3 years. New products, InvITs have come in, which are yield driven, where you can get the same type of returns, where you have capital appreciation, you have a diversified portfolio, so you're not stuck with one asset in that micro market. God forbid that micro market crashes. It's happened. It's a very difficult situation. You have a large amount of money stuck. Nobody wants to buy the product. You're not getting any yield. Tenant is walked out, right? And so you get into this mode where it's very difficult. And so people have gravitated away from it. They're now moving more into public markets, more interest in private markets, doing private deals or investing into funds, doing structured credit, and of course, latest flavor being, crypto.